Hello and welcome. You're watching ET Markets. I'm Tanya Aneja, and today I'm going to be joined by a very special guest. He's an entrepreneur, a teacher, and one of the most famous content creators. Well, we have with us none other than Akshat Shrivastava. Thank you so much, Akshat, for joining us on ET Markets.
Thank you, Tanya. It's a pleasure being here.
So, Akshat, if I talk about the first 6 months, the markets have been so volatile. I mean, we're still fighting with inflation, rate hikes are happening. So do you think that these factors will play a major role in the second half of 2022 as well?
Sure. So I'll speak in points. So point number one is that markets are forward-looking creatures, right? So they do not go by what is happening as of now. They go by what is supposed to happen 6 or 12 months from now. So when it comes to high inflation, interest rate hikes by the Feds and different national governments, when it comes to supply chain disruption, I feel that majority of these news have already been factored into the markets, and therefore we are seeing, for example, in the US, which brings me to point number 2, that in the US the first half performance of 2022 has been the worst in the last approximately 42 years, which is a very big deal. So from that particular perspective, I feel that a lot of negative news has been factored into the market, and we should start seeing an upward journey. When exactly, no one can say for sure. But yeah, I mean, the growth will come, and especially when it comes to growth stocks, growth sectors, these are going to start performing well.
Okay, and also how do you pick winners for investment? I mean, how are you approaching market at this point in time, and which strategies one should follow to protect the portfolio amid volatile markets?
Sure. So I'm a diversified investor. So I invest across different asset classes, and within equities, I invest across different sectors. I invest both in India and the US. Now, what sectors to pick? A more pertinent question would be that what specific stocks to pick. I do not feel that any sector per se is bad. It is just that you need to pick the right winners. There would be very few sectors that will be that where we could say that, hey, these are like secular winners. Everyone is winning in this sector, vis-a-vis some sectors that are consistent losers, right? So very hard to pick sectors per se, but if you're picking good companies within each of the sectors, then I think you will have a easier time ahead.
Absolutely. And if someone is planning to put, let's say, 10 lakh rupees right now, which is the ideal medium according to you, and what should be the ideal asset allocation strategy?
Sure. So first and foremost, it depends on what type of an investor you are. For example, if you're 25 years old, vis-a-vis if you're 50 years old, then your investing strategy, your investment goals will be very different. For example, if you're 25 years old, then taking positions in slightly riskier assets might make a lot more sense. For example, you can buy tech stocks and explore other asset classes. But if you're a slightly more defensive investor, right, you're 50, you are depending on your stock market / mutual fund investment or your investment income in general to sustain, then taking some positions in bonds would make a lot of sense from that perspective. So really depends, right? I mean, what is your age, background, demography, etc., etc. But for a balanced investor, I would say that have a split between 70% equity, 30% bonds. That is the usual split that is recommended. Within equities, stay diversified across different nations, stay diversified within sectors. India, great time to invest in India. A lot of investor interest will come back to India. It is one of the very few emerging economies that has the potential to grow sustainably over a long period of time. So if you are taking 5 to 10 years view of the market, there is a very good chance that there will be a good bull run in India from which we as investors can benefit. So just pick good businesses. That's a simple viewpoint there.
Absolutely. Stay diversified. That's the word coming in. And also, let's talk about recession right now. I mean, do you see recession fears are real for global economies? What are the chances of recession in the US? And how do you see that? And what kind of impact can we have on the equity markets?
Right. So recession is a backward-looking number, so to say. Once recession, like in economic terms, would mean that the slowdown in growth for at least 2 quarters. So that is how most of the economists define recession. So first, the slowdown in economy needs to happen, and then Feds will say that okay, recession happened in this phase. So recession is already there, right? So it's not as if that recession is not there. They will officially announce it next month, right? So that is when it will be official that we are in a recession. But recession is 100%, right? So we are in a recession. How is it going to impact the stock market? Again, the point is that stock markets are forward-looking creatures, so they have already factored in the recession. What is going to happen from 6 to 12 months from now is more important. So everyone is predicting what is going to happen in the stock market 6 to 12 months from now, my viewpoint is optimistic. If you buy things at a discount when things are falling, when there is negative sentiment in the market, that is when you make the most money. And right now, very high negative sentiments prevail. So it might be a good time to start constructing your portfolio.
Absolutely. And what about the foreign investors? I mean, they have been on a selling spree, and fortunately, the DIIs have certainly acted as the shock absorbers. But what is pushing FIIs away from the markets? And what is your outlook on this relentless FII selling pressure?
So to be honest, I don't think that FIIs have sold that much, right? If you actually analyze the data, you will see that approximately 92% of their portfolio is still invested in the Indian market. They have withdrawn 7 to 8% of their portfolio and taken it outside India, which is completely okay. This is called as de-risking of the portfolio. So whenever any kind of crisis happens, or whenever there is any kind of looming recession that is going to happen, growth economies suffer the most. India is a growth economy, therefore 8% of FII money has been pulled out of it, right? So it's not end of the world. It is like you saying that, hey, I used to have like 100 rupees in the stock market, now I have withdrawn 8 rupees, so stock markets should crash because retail investors have withdrawn 8% of their money. No, it is not going to work that way. Whenever growth returns to the world, so to say, whenever the government start printing more money, whenever the government start exploring expansionary policies, growth will return to the market, and so would FIIs.
And when can we expect that, according to you?
No one can say that for sure. I mean, it's like me trying to predict when the growth will happen in the market. Very difficult to say. All I can simply say is that the extent of negative news that is there, it has been absorbed to a very large extent. And stock markets, or rather investments, are designed to go up in the times that we live in. Everyone loves growth. Everyone loves VC funding. Everyone loves government printing more money. So all these actions will come back. It's not as if that they will go away. And this can be checked by looking at the history of bull run and bear run. So bull run means that the markets generally go up. Bear run means that the markets fall. So from that particular perspective, you will observe that if you look at the last 100-year data on the stock market, we have mostly stayed in a bull run, approximately 70 to 75% of the time. So markets are designed to go up, they will go up. When exactly, no one gets it.
So nobody can time the market, according to you?
You can't. Absolutely not. No one. Yeah.
Okay. And Akshat, your advice for all the new and young investors, any mistakes that they should avoid, especially at this point in time?
Right. So point one is stay diversified. Point two is that buy businesses. If you understand businesses, please do business analysis. Three, if you understand the type of an investor you are. This is very, very important, because sometimes what people do is that they will figure out that, okay, this particular small cap stock is going to give very high return, so I'm going to invest my entire portfolio in that stock. So please don't do that, right? I mean, if you have 100 rupees to invest, please split it at least between 15 to 20 stocks, right? That's the absolute minimum, right? So your 100 I just use as a matrix, so take it as a percentage. So if you have, let's say, 1 lakh rupees, so at least invest in like 15 to 20 stocks. That's the simple message that I'll give. So staying diversified is very important, especially when the entire market is moving as per the macros.
Okay, that's all right. Akshat, before we let you go, your thoughts on all the new age internet companies? I mean, the stocks of all the new age internet companies have corrected significantly. So what is your take on that?
See, to be honest, I'm optimist, right? In the sense that if you study the history, if you study the .com crash, majority of the internet companies went away, right? But there were companies like Amazon, which lost approximately 90-95% of their value. And now they stand one of the biggest firms on earth, right? So the point is that any new age internet companies or set of companies, again, majority of them will go away, right? But whichever survive, they are going to actually become major catalysts in the market and might become one of India's biggest companies, right? I mean, going in the future. There is a reason why even conventional companies are moving towards tech. So we need to appreciate the viewpoint that tech is risky, right? At the same time, there are opportunities associated with it. It indicates a change, and change is always very difficult for people. And of course, there will be a lot of volatility around the way that some of the good internet companies will lose their stock market price by even like 90-95%. But the story of Amazon can repeat. That is, there is absolutely no reason why it should.
Okay. On that note, Akshat, thank you so much for taking the time out and being with us here on ET Markets. Thank you so much.